This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all of Bitcoin, all the time. I'm your host, Christine Lee, checking in live with Bitcoin right now. The CoinDesk Bitcoin price XVX index is up about almost 3% over the past 24 hours. Currently at $42,976. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, just globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin continuing to hold support above $40,000 as the momentum improves on the intraday charts. According to CoinDesk's Dominic Dantes, upside appears to be limited toward the $43,000 to $45,000 resistance zone, and $48,000 could present another hurdle for buyers given the series of lower price highs since November. BTC is down about 4% over the past week, although multiple oversold readings suggest buyers could remain active. Traditional markets are slightly up with Bitcoin. Are they correlated? In this TradingView chart, crypto research firm Fundstrat pointing out that the 90-day rolling correlation between BTC and cloud stocks in light blue is approaching 1, while its correlation with the U.S. 10-year in black has decreased sharply and is fast approaching -1. Fundstrat reinforcing its view that while Bitcoin is correlated to tech stocks, it has outsized negative correlation with rates, and that most sellers at this stage of the recent drawdown are likely from investors whose portfolios are weighted toward legacy assets, shaking at more risk-averse or short-term oriented speculators. Taking a look at some of our top stories, energy use in crypto mining is under the microscope in Washington, D.C., as a House subcommittee questions the industry's environmental impact. Cornell tech professor Ari Jules pushing back against the claim that crypto mining machines are becoming more efficient. We have a clip.
It was noted earlier that mining machines are becoming more energy efficient, and that is absolutely the case, but also an extremely deceptive claim in my view. Mining rigs are not like the light bulbs in our house, where more efficiency means less electricity use. So to be clear, individual mining rigs are growing more energy efficient, but crypto mining as a whole is becoming less energy efficient. And that's because rewards and therefore profits aren't determined by absolute mining power, but by mining power relative to your competitors. So mining rigs have grown more energy efficient over time, and one can see this with reference to the data, but overall energy consumption in crypto mining has been growing over time, particularly over the past year.
Yeah, and Bitfury CEO Brian Brooks pointing out that more efficient machines actually do make the whole system more efficient overall, and that less energy is consumed per block mined. Meanwhile, Russia must ban cryptocurrencies, the country's central bank saying in a report today, adding that Russia needs new laws to effectively ban crypto-related activities from trading to mining, but not private citizens' ownership to prevent capital escaping the national economy. And finally, the SEC rejecting the proposal to list a spot Bitcoin ETF by investment advisory firm First Trust and hedge fund SKYBRIDGE'S Capital. The rejection comes as no surprise, given the precedent set by the SEC for a preference for ETFs that track the Bitcoin futures market. All right, joining me now to discuss this news and more is Stephen McClurg, Chief Investment Officer at Valkyrie. Hello there, Stephen. Thanks for joining us. So you've been watching the hearing from this morning. It's been a bit of a marathon hearing. So, I just want to get your top takeaways as you listen to lawmakers debate the energy use in the Bitcoin mining industry.
Absolutely. And thanks so much for having me. Well, the first thing that I want to point out is, and many people in the community knows this, but Jules is actually the chief scientist at Chainlink Labs, which is another proof of stake blockchain. He failed to reveal that conflict of interest. So I just want to make sure that we point that out. We also have been following this very closely and have been running a tweet on how there's a lot of misinformation that's being presented in a lot of these hearings, many of them that actually came from Jules himself. He overestimated the amount of energy that the Bitcoin blockchain uses. He estimated that it's about it's about twice what the Cambridge Center for Alternative Finance has said in their report. We also want to point out that on the proof of work blockchain, rewards are received randomly when a mathematical problem is solved, and it's not correlated to actual transactions. So those are some of the main points of misinformation that we've gotten there. But overall, it was a pretty fair and biased call today, and we were very happy with what we saw.
Yeah. So I also saw that your head of research at Valkyrie was tweeting about Professor Jules, who alluded to a 51% attack possibility on BTC, suggesting that only 4 mining pools can control the whole BTC chain, which would require almost impossible coordination. Can you walk us through this? We have the chart here. It seems that theoretically this could happen, but very difficult to pull off.
Yeah, that's correct. That's one of the things that we really want to point out, that even though that there might be 4 very large mining pools, a lot of people are participants in that pool. I myself am a miner. I participate in one of those pools. So it's very difficult to think about this. It's not like you have Amazon, Google that are running these things, and all the decisions come from the top down. You have very, very many participants in a lot of these pools, thousands of participants that participate, and it's very difficult for these pools to corral all of those votes to ever come up with a 51% attack.
Mm-hmm. You also mentioned Professor Jules has a bit of a conflict of interest in your view, and that he's with Chainlink and supports proof of stake. And the other day we heard from an EU regulator who also thinks proof is more efficient. Is this becoming a trend? What do you make of the steady chorus of policymakers who are criticizing proof of work but have a more positive regard for proof of stake?
No, I think that's right, Christine. I mean, we're seeing it more and more where leaders in a lot of these blockchains, whether it's Chainlink or others, are taking jobs as fellows at some university, and then going back and utilizing their title or role at a university and saying, yeah, I represent Cornell or I represent NYU. I mean, I used to teach at Pepperdine. I don't go out and say that, I'm a professor at Pepperdine and I represent their views. I represent Valkyrie. It's very clear. So that has become a problem in the academic circles. But it also has become a problem in the federal government as well, and how they're representing themselves to policymakers and to the SEC and others.
Mm-hmm. All right. So where do we go from here? We're having this discussion that the debate is being held in DC right now as they look at the use of energy in the mining industry. What positive steps would you like to see in the industry happening going forward?
Yeah, absolutely. I mean, some of the main takeaways that we have here is, number one, crypto miners do use a good amount of energy, but there's a vast gulf between what the industry consumes and what the public perception of its use is, and how it actually impacts local energy grids in the U.S. It actually has very minimal impact. As a matter of fact, a lot of the miners that are moving out of China and already have moved out of China in places like Texas are utilizing what's called gas flaring. And what gas flaring, the way that gas flaring works is when you drill for oil, you also find natural gas. That is something that comes hand in hand in the oil fields. And there's not a whole lot of use for natural gas in a lot of the power grids in Texas. So what they have to do is they have to flare off that natural gas, just burn it off in order to produce this oil. So one of the things that a lot of creative miners have done moving to Texas, and a lot of these efforts have been led by Governor Abbott and by Senator Ted Cruz, is to get miners there and utilize that natural gas that's being run off from oil drilling and pipe it into the rigs in order to utilize it where it's not just being flared off into nothing. So those are the types of things that are happening that are very innovative, they're using energy, but they're using energy that's going to be burned off without any type of use. And this is happening not just in Texas, it's happening in places like Wyoming and in Canada, where and other places where there's shale and where there's a lot of oil drilling. The other thing is there's a lot of complaints about the energy waste but they're generally unfounded. And compared against other industries, it only amounts to about 200 terawatt hours per year, and that's really all. That's really enough to power the Bitcoin network and then some. But what we're also seeing is a spike in electricity costs in the U.S. versus other staples too, right? So, for instance, gasoline prices are up almost 50% in the U.S. Gas utilities up 24%, and really, what we're seeing in electricity costs is only up 6.3%, and that's where a lot of the other uses are for Bitcoin mining.
Mm-hmm. All right. Well, Bitcoin's a cutting edge technology. It makes sense that they come up with cutting edge ways to make it more energy efficient. All right, Stephen, we've got to end it there, but thank you for joining us. That was Valkyrie CIO Stephen McClurg. Coming up, Brazil wants to add Bitcoin to the balance sheet. Stay with us. We'll discuss.
I'm Pete Paschal, Chief of Staff for Content, and you're watching CoinDesk TV.
Welcome back. The mayor of Rio de Janeiro planning to allocate 1% of their city's treasury reserves to crypto, according to local news source Globo. The Brazilian city also planning to give discounts on tax payments made with Bitcoin. Joining us now to discuss is Bruno Ramos de Sousa, head of global expansion at Brazilian crypto asset manager Hashdex. Hello there, Bruno. Thanks for joining us. So, I'd love for you to talk a bit about the financial environment of Brazil to kick us off. What are the concerns of the average Brazilian right now? And, as we discuss in this context, having Bitcoin on the city's reserves of Rio de Janeiro.
Thanks for having me, Christine. It's great putting things a little bit into context. Brazil has been facing some struggles economically. I think this, inflation's rising. There's always this scenario that we're trying to get, public finances right. And I think in that space is where you have, leverage to get some ideas that are a little bit more innovative across. And I think that's where it comes from. The mayor of Rio is someone that's forward thinking. He's, had some interesting initiatives in the past. And he's seeing what's happening in other places like Miami, and El Salvador and places like that. And certainly having an open-minded approach, looking at different ways to create revenues to the city. So that's, in the general sense, when you look at, in a macro environment in Brazil, when you look at investments, there's a whole revolution in investments happening, a sophistication of investors going into more, let's say, different assets. Brazilians usually invested in fixed income with large banks. You're seeing that moving, initially from stocks and then to other things like crypto. And crypto investments in Brazil are huge, either through exchanges or ETFs, which is what we do at Hashdex, ETFs and private hedge funds and mutual funds. So there's a whole trend of looking into more interesting, innovative, different types of investments, and that's where the announcement comes from.
And what has been the reception among the people of Rio and perhaps Brazil at large for this proposal?
It's been very good. People understand crypto. I think today's a lot easier than it was in the past. You can see Bitcoin returns for the past several years, and there's a high level of education in Brazil around crypto and crypto investments as a whole. So people took it naturally, of course, with questions around things like, how is this going to be made? How's security and things like that? What happens with volatility? But very reasonable questions, not anything, blocking it intellectually. So it was surprising. It was quite receptive to the concept. And now it's, of course, going to... Yeah.
By contrast, you see Moody's downgrading El Salvador for their Bitcoin trades and putting Bitcoin on the balance sheet, and it's generally frowned upon by the likes of other institutions like the IMF. So is that a concern?
I think not at 1%. This is not something that changes public finance substantially in terms of, we have these studies around portfolio composition. And we know that, with the right exposure, you're actually improving Sharpe, improving the risk profile of your investments, adding some crypto spice, right? So when you look at the numbers, there's no reason for that. Of course, if you're looking at something like 20, 30%, then we're in a whole different discussion. But in that level, that wouldn't make any sense. So actually, of course, the expectation in larger periods of time is that this is a net positive for city finances. And that's, of course, where the mayor's idea is coming from.
Yeah, but Bitcoin has been in retreat of about 40% since its peak in November. I wonder where do you see Bitcoin headed? It's trading sideways, struggling to find some direction. How long will this last?
Yeah, I think, this is it's always hard to comment on the short-term movements. Our impression is that this will continue. We're trading sideways for some time. But I'm pretty confident that, as we've seen in other cycles, once this consolidation phase goes through, we're going to see that, other upswings and other levels, a lot, based on what we're seeing in terms of the growth and interest from institutional investors, essentially. In Bitcoin and crypto in general, we have this thing, the retail moved first. But we're seeing more and more in our interactions with family offices, hedge funds, and even more conservative investors. They understand that this is a legitimate asset class and they have this space in their portfolio. So, as this money keeps coming in, in 2022 and other years, it's logical that, there will be support for increased private movement. That's right. A little bit of our reading here.
All right, Bruno, thanks so much. And I also see that Hashdex is going to be launching a DeFi ETF, including Uni, Aave, and Comp. So congratulations on that. The product will be listed on Brazilian stock exchange at B3 as of February. All right, Bruno, thanks so much. That was Hashdex Head of Global Expansion, Bruno Ramos de Sousa. That's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again tomorrow at 3 o'clock in New York. Also, join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.